It is another interesting edition of the Economy and Politics show where we bring you key economic developments as it affects the households. This edition will focus on the expectations from the 283rd Multi-Policy Committee meeting of the Central Bank of Nigeria. I will take excerpts from our interaction with Dr. Biodun Adedipe, an economist who was one of the facilitators at the just concluded 8th National Economic Outlook powered by the Chartered Institute of Bankers of Nigeria. But before we begin the discourse, let us give you some key stories from last week. Headline inflation in Nigeria for December 2021 rose to 15.63%, while food inflation increased by 17.37%. The rise in the food sub-index was caused by increases in price of bread and cereals, meat, fish, potatoes, yam, and other tuber soft drinks and fruits. Also last week, the president of the Trade Union Congress, Comrade Quadri Olaleye, urged the federal government to fix the moribund refineries in the country before putting an end to the payment of petroleum subsidies. We go on a break, and when we return, we'll continue the conversation.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch Web TV. Same news, different perspective.
Welcome back. If you're joining us, it is the Economy and Politics show, and we are looking at the expectations from the 283rd Multi-Policy Committee meeting of the Central Bank of Nigeria, a two-day meeting which is the first for the year. Like I said earlier, we had the opportunity to cover the 8th National Economic Outlook facilitated by the CBN, which featured Dr. Biodun Adedipe, Chief Consultant, BAA Consult, a cerebral economist, as a resource person. We asked him what approach the central bank will take considering the normalization of interest rates across developed economies. Here's what he had to say.
I expect the MPC decision to be dovish, and I'll give my reasons for that. Number one is that if you look at the Nigerian economy as of today, the economy needs more of attention to growth rather than worry about inflation. Why do I say that? If you look at the rate of inflation in Nigeria now, yes, in the last 8 months, it trended downwards and then did an upturn in December to 15.63%. Now, given that, yes, we say we've now gotten through what we might call the base effect that moderated inflation in the preceding 8 months. So now, after that, we ask ourselves, what do we expect to happen in 2022? And that is why I look at it from the point of view of the MPC, also asking the same question. Do we expect inflationary pressures to mount strongly in 2022? To some extent, yes, inflationary pressure will still be there. It's a pre-election year. Normally, spending for electioneering campaigns and the rest of it, we make liquidity. It may not lead into a surfeit per se, but we expect liquidity in the system to become a little higher. And that will trigger some inflationary pressures, no doubt. But it will not go completely out of hand. Why is that so? Because the economy is also growing. And so coming from on the back of the growth of 2021, which we project may likely end around 3.151617%. So because for January to September 2021, the average growth rate of the GDP of Nigeria was 3.18%. So on the back of that, we also expect the economy to grow in 2022 at any rate between 3.23 and possibly 3.5%. Of course, the World Bank and IMF, they project a lower growth rate, 2.5, 2.7. But looking at where the growth came from in 2021, which is mostly non-oil sector, and there's the likelihood that we may see a repeat of that. And then the oil sector itself, in spite of so much noise, I would say, around green energy, electric vehicles, and the rest of them, there will still be demand high demand for hydrocarbons. So if the demand for hydrocarbons remains high, and of course, price remains favorable as we have seen from the beginning of the year, the likelihood then is that we may see the oil sector also add to the growth, which is why we expect that growth will be above 3%. So if the economy grows that way, also normally a growing economy racks up inflationary pressures. We call it trade-off in economic management. But for Nigeria, we are coming from a base where we have largely depended on imports. So if we now begin to produce more locally, that will only take up the slack that import had filled before. And if that happens, then what we may expect to be inflationary pressures will be dampened somewhat. So, but my expectation though is that inflation rate will still remain double digit, but it won't go completely out of the range of the first level of double digit. That is 11 to 19%. That's what we call the second level. So unlike what we see in some African countries. So given that, we then look at the exchange value of the naira. Okay, in the budget it says 410 naira to the dollar. In the budget, that's the assumption. But as of today, we are looking at 414 naira to the dollar at the I and E window, which of course is the official rate central bank uses as of today. Question then again is, will the naira likely be devalued by the central bank? And that is an area also I see the MPC may have to interrogate a lot more. And why do I say that? If you take our external reserves as of today, although an improvement over the end of 2020 by about 15%, thereabout, in terms of external reserves, but our import bill has gone up. In fact, I would say in a way that should create some concern, from about 3.6 billion monthly bill between January and June 2021. But by the time you look at the figures for January 2021 to September 2021, you are looking at about $8.9 billion per month, okay, equivalent. So that is quite high. When you set that against the external reserves, you are looking at a figure of about 4.57 months cover, which is now less than the minimum that can assure you stable exchange rate for the naira. So given that premise, unless our import bill drops significantly, the central bank may be pressured, therefore, to again devalue the naira. Okay? So the interplay then of this vis-a-vis normalization of interest rates in the advanced economies, where most of the portfolio investors come, all right, is now to look at, one, the interest rate differentials vis-a-vis the risk of investing in Nigeria, which is, of course, two dimensions. Sovereign risk is one, and then country risk is another. So if you talk about sovereign risk, that relates to the government's ability to meet its maturing obligations. When you talk about country risk, it then talks about the risk of doing business in Nigeria. Now, will any of this change significantly in 2022? I don't think so. So if that is the case, then the risk premium is what to put against that interest differential. And so if the risk premium doesn't change, then the foreign investors have no reason to think that the differential positive here by leaving their investment in Nigeria placed against a risk that can make them troop out. So normalization outside there is unlikely to make portfolio investment to troop out of Nigeria, because in Nigeria here we present what we call an aberration in finance. Aberration simply means that you are getting a rate of return that is not necessarily commensurate with the risk. And that is why you want to come here and say, look, in spite of the risk that I've seen, I still want to put my money here because I get my returns. Most importantly, if capital is mobile out of Nigeria. So which means if I invest, for example, in the stock market, all I need is to ensure I obtain a certificate of capital importation to Nigeria. And that gives me access to taking the money out of Nigeria when I decide to. So far as our capital, account policy doesn't change, that is, remains liberal, then we may not have any concerns with respect to normalization vis-a-vis decision of investors to either leave their money here or take it out. So unless, again, the political game brings its own concerns, which, of course, is a usual consideration in Nigeria. If I write from 1999 till date, if you look at the pre-election years, since then till date, usually toward the end of the year, there are always permutations and projections Will there be, one, a change of government? Now, this time around, we know President Buhari, of course, will finish his 2 terms. So certainly somebody else will come in. But the argument now will be, who is likely to come in? And from which of the 2 major political parties? Because that's the way this thing is done anywhere in the world. So the question will now be, who is likely to win, either from APC or from PDP? If the person comes from APC and is projected to be likely to win, it then means you don't expect any radical change in policy. Because that is what most international investors look at. If they don't expect any radical change in policy, they leave their money. But if they see a situation where the government might go to the opposition, the question will now be, who is the candidate of that opposition? And what is the message that candidate is putting out to the market? So if the message points in the direction of any radical shift in policy, then the question again will be, in which direction will the policy shift go? If that direction will favor international investors, then the capital funds will remain. But if they see it's not likely to favor them, then the money will troop out until after the election, and then they see the direction the new government is going. So for me, therefore, looking at MPC, I will see them taking a decision for now to remain dovish, leave the rates as they are.
Very insightful analysis from Dr. Adedipe, a scholar and expert who has contributed immensely to economic policy formulation in Nigeria for over 3 decades. Now let's give you some updates on monetary policy decisions taken so far in the globe, or the trends which we'll have to watch, which will also have impact on the Central Bank of Nigeria Monetary Policy Committee. First, from the US Fed. The US Federal Reserve, a Goldman Sachs analysis and Reuters poll in their separate analysis believe the interest rates will be raised 4 and 3 times this year respectively. That will have a huge impact on emerging markets and frontier markets like Nigeria, so watch out for that. From the Bank of England, the major concern is a rising inflation tide like the USA, and there are indications that it will continue its normalization drive in February with another hike in interest rates in the offing. So again, another interesting development to watch. For the European Central Bank, the Eurozone inflation is also rising at the current rate of 5%. But despite these concerns, the ECB, led by Christine Lagarde, is not in a hurry to raise interest rates. So it's interesting to see the ECB approach and how it's going to really affect monetary policy. For the Bank of Japan, according to Reuters, the Bank of Japan has also raised its inflation forecast, but said it was not in a rush to change its ultra-loose monetary policy. As rising prices fan speculation, it may soon signal a shift in decade-old stimulus experiment. And of course, you know that's the approach of the Central Bank of Japan Governor, Yoshida Kuruda, who believes a lot in the ultra-loose monetary policy. So we're watching that too, and how that impacts the monetary policy environment. In all of this conversation for today, the major denominator across board is the fact that inflation, as we call it, that big monster, rising and affecting economic activities. It will be interesting to see how the monetary policy tools across developed and even emerging economies and frontier markets will be deployed to navigate the economic terrain, because you know inflation has its wide impact on households and businesses and economic activities. But for the CBN Governor, Mr. Godwin Emefiele, is the first MPC meeting for the year, and of course, as he meets with his members, there are 5 critical issues he will be looking at. First, Nigeria's fragile economic growth, yes, it's 4.01%, progressive. Recovery is there, but it's fragile and it needs to be sustained. It needs to get to over 8% to drive activities for the nation. The second is the double-digit inflation. 15.63% is huge, it's massive, and how do we manage the situation? Food inflation is over 17%. Again, a big concern for Nigeria, so that will be a concern for the MPC. Exchange rate stability and external reserve. Are we going to see another level of devaluation? And what are the implications? And of course, analysts have even talked about the external reserve being used to, again, fight for the naira. How long would that take? And what are the impacts on the external reserves? The interest rate environment, I've talked about the normalization of interest rate approach of developed economies. So again, this comes to the fore as we see the interest rate environment very key. And of course, the pre-election year, you've seen the political activities have already started. We've seen various people declaring their interest for the presidency in 2023 general elections. And of course, we have 2 gubernatorial elections this year. So It's massive, massive activities that will shape monetary policy. So we expect to see some key steps. And the big question, Dr. Adedipe believes that the central bank will take a dovish approach. And let us hope that that's the case. But for me, an interest rate hike tomorrow will be unprecedented at this time. Would that happen? That would be very unusual. But we will all be monitoring the whole developments as they come. But this will be a very key policy decision that will have impact on the economy. That will be all for this edition of the Economy and Politics Show. If you have questions or comments or suggestions on the 283rd Monetary Policy Committee meeting of the Central Bank of Nigeria and what you think about the approach of the CBN, should it be dovish, hawkish, or whatever approach, please send them to tobasi.abaseko@approachng.com. Also join our website www.approachng.com to read our latest news, articles, stories, and reports on the Nigerian economy. You can engage with us via our social media platforms displayed on the screen. So we come your way again. Thank you for watching and have a nice day.